So here are the 10 steps of the procure to pay process once again. We start by receiving the approved purchase requisition. Then we move on and invite quotes from vendors. Once a vendor is finalized, we issue a purchase order. Once a PO is sent, finally the goods or services are received from the supplier. Once the goods come in, we either book inventory or create a receipt. Finally, we receive the supplier invoice from the supplier and send to the accounts department. The scanned invoices come to the accounts department, which are then processed, approved, and finally the payment is issued to the supplier. Now these were the 10 important steps of the P2P process, and now what we are going to do is we are going to understand what are the key documents involved in the entire P2P process from the beginning to the end. Now it's very important that you remember all of these documents very carefully, because you're going to be working with these documents day in and day out, right? So the first document which we have to talk about is the purchase requisition. Now if you remember, the purchase requisition was the original document which was issued by a user in an organization who needs to procure certain goods or services, and they are then sent to the purchase department. The purchase department then issues something known as an RFQ, which is the second document with us. RFQ also stands for request for quotation, and this document is basically sent out to all the prospective vendors who are the supplier of those goods or services. Finally, the purchase order is issued to the supplier, and this purchase order will have all kind of details like what is required to be purchased, when do we need the delivery, so on and so forth. Now after the PO is issued, the goods are delivered, and this results in the creation of a delivery note. The delivery note is a document which is actually issued by the supplier, but the goods are not yet finally accepted by the buyer unless the buyer has issued the goods received note. So once they've issued the goods received note, it basically means that the buyer is really happy with the quality of the goods or services provided. And finally, we have the all-important invoice, which is also the bill which is sent by the supplier to the buyer. So these are the 6 very, very important documents involved in the procure to pay process. And now let's take a look at them one by one. To start off with the purchase requisition, now on your screen what you see right now is a sample purchase requisition which is issued by somebody to the purchase department, giving details of what is required to be purchased, so on and so forth. So let's try to see what it actually contains. Well, first and foremost, it contains details of the organization for whom this purchase requisition is issued, including who is the purchasing department in this particular case. So you have details of the purchasing department. Now an organization may have more than one purchasing departments or departments which require these goods or services. So that details basically comes here. Next, you have the date of issue of the purchase requisition. Now this date is very important because sometimes organizations want to track on what date was a purchase requisition actually issued, and then actually on what date was that requirement fulfilled by goods or services being provided. Ideally, there should be very little lag time between the issue of a purchase requisition and the final receipt of goods or services. And then of course it has details of what is required to be purchased. So this will have all kinds of information in terms of what is the nature of goods and services. For example, if a laptop is to be purchased, then what should be the specifications of that laptop? Should it be a Windows laptop or a Mac OS laptop, or what should be the size of the hard drive, the size of the RAM, so on and so forth. So that was the purchase requisition. The next document which we are going to look at is known as the RFQ, or the request for quotation. Now once a purchase requisition is received by the purchasing department, it actually goes on and issues an RFQ to all prospective vendors. Now in this particular case, let's see the example of an RFQ issued by a person called Bob Grenier. And who is Bob Grenier issuing this purchase RFQ to? This RFQ is actually issued to a host of different possible suppliers. In this particular case, is issuing to a supplier called K Ventilation. And the first information captured in the RFQ, of course, is the name of the supplier. Then you have, contents of the RFQ, which basically specifies what kind of product is needed. So for example, in this particular case, he says, my house is 4,500 square feet and I have used 2 individual central air conditioning units. There is about 6,000 feet of ventilation piping that needs to be replaced, as well as 2 compressor units and 6 control panels. Now here he is giving out information in terms of what exactly needs to be done. Now it is very important for the RFQ to contain these details as detailed as possible, because once a prospective supplier takes a look at these details, it will help the supplier in assessing whether he is capable to provide these goods or services or not. And also, if an RFQ is very clear, it prevents any ambiguity towards the later half of the entire business process. And finally, it has the name of the person who issues this RFQ. Or in most of the cases which you will be working with, you will have the name and address of the organization which issues the RFQ. An RFQ is also known as a tender. Now you must have heard this term a lot of times. Tenders are large bidding contests which are issued by the government most of the times. So a tender is nothing different from an RFQ. If a government issues a tender, it basically means that the government is asking people to bid on that particular tender and tell them that if they are able to provide those particular goods and services which the government is looking at, then at what price would they be provided, so on and so forth. Next, we come to the purchase order. Now by this time, the vendor is already finalized and the company has decided that, hey, I'm going to purchase this particular good or take use of certain services from a particular vendor. So let's take a look at what a purchase order looks like. Firstly, it has name of the issuer. In this case, the issuing organization will have the company name, the address details, the phone number, the contact details, etc. Then it has details of who is the purchase order being issued to. In this case, the vendor. Now it will have details of who the vendor is, what is the address of the vendor, any tax details of the vendor, the contact details of the vendor, etc. Then you have a section which says ship to. Now this ship to address is basically the address where the issuing organization wants the delivery of goods or services. Now it is not always necessary that the goods or services are provided at one particular address. An organization can have multiple addresses, whereas the purchasing department might be centrally based in any particular locality or any particular city. Hence, the ship to address basically tells the vendor where to send across those goods or services. Next, you have the date of issue of the PO and the PO number. Now these two fields, guys, are really important because this uniquely identifies the purchase order. No two purchase orders are going to have the same PO number. So a different PO number is mandatorily required for every purchase order. Then of course you have details of what is required to be purchased. So in this case you have product XYZ and product ABC, and then you have details about it, how much quantity you needed, what is the unit price at which you want this, and finally what is the total amount. Now it is important to note here that when we say that we require, let's say, 15 quantity of product XYZ at a unit price of 150 per unit, now this price of 150 per unit would already have been negotiated with the vendor, and that is why the purchase order is being issued here. And finally you have the total amount of the purchase order. Now this total amount field is also very important because you need to actually compare the total amount present in the purchase order with the total amount on the invoice to ensure that both of the things are matching. You might have a situation where your purchase order is saying that, okay, I issued a purchase order for $100, whereas the invoice came in for $125. In that case, you cannot go ahead and pay the invoice because there's a matching conflict. Now this is known as a two-way match, and we are going to go and do this in a lot more details a little later, right? So this was a purchase order. And finally, yes, you have another box which basically specifies any special comments or any instructions for the purchase order. Then you have a document known as the delivery note. The delivery note is issued by the supplier when he has supplied the goods or services. First and foremost, it contains the delivery note number, the delivery date, and also the order number or the PO number. Now this uniquely ties up every delivery note with a unique purchase order. It also has details of the billing address of the party who has drawn the delivery note, in this case the supplier, and the delivery address which was given. Now if you remember, the purchase order also had a ship to address. Now the ship to address in the purchase order is going to be the same as the delivery address in the delivery note, and it also has details of what kind of items were delivered, the details, the price quoted, so on and so forth. Now once the delivery note is issued, it basically means that the supplier has completed the delivery of goods and services. But does it necessarily mean that the goods and services are accepted by the buyer? It does not. Now the goods and services are accepted by the buyer only upon quality checking of the goods and services. Let's say I ordered for 100 laptops. Out of those 100 laptops, 10 laptops were not working correctly. So in that case, I would not issue a goods received note for the entire 100 laptops, but I would issue it only for the 90 laptops. Alright, so let's take a look at what the GRN looks like. At first, it always has the GRN number. It has the date of the GRN, which basically is the date on which the quality inspection is made and the organization certifies that, alright, fine, we have received so many goods. Then it has again the order reference, which is the same as the PO number, the quantity, the description of what was received, and who was the person who received these goods and who was the person who checked these goods, right? So in this case, Mike received these goods and Mr. R. Pope checked these goods. And finally, the condition of the goods are certified, right? So in this particular case, it says that the condition of the goods is good, no damages. However, 10 box files were missing. Now they ordered for 50 box files, but 10 box files were missing. So they would accept only 40 box files and not the rest of the box files. Now after all this is done, the GRN is also issued. Finally, the supplier gets his chance to issue the bill or the invoice and claim for payment. Okay, so the invoice is the second most important document after the purchase order. What does an invoice contain? First, it contains the name of the party who has drawn the invoice, in this case the supplier. It will have the invoice number. Now the invoice number is also a very important document. Every PO might have multiple invoices. It's very important to note this. But one invoice will never have more than one PO number in place. So you might have a PO which is also known as a blanket PO, which we'll discuss a little later, where for a given PO you might get multiple invoices from the vendors. Alright, let's not get into those complexities right now. Let's just keep our focus on what the invoice contains. So it contains the invoice number and the invoice date. Then of course it has the details of the item, the description, the unit cost, the quantity, the price, and finally the total amount of price. And also it has details about to whom this invoice is being sent, which in this case is the buying organization. Now the other important thing here is the terms and conditions of the invoice. Now whenever a good or service is provided to an organization, it basically comes with terms and conditions. Now these terms would say that, for example, in this case it says all repairs are guaranteed for up to 6 months. Please call us with any questions or concerns regarding repairs or any other issues. So it could have clauses about the warranty. It could have clauses about when the payment for this invoice is supposed to be made, so on and so forth. Alright, so now you know that these 6 different document types are the most important documents in the P2P process. What you need to understand is who issues these documents. Now what I want you to do here is, before we discuss who issues all of these 6 different documents, I want you to pause the video and take a break and try to guess it by yourself. Okay, so who issues a purchase requisition? A purchase requisition is an internal document which is issued by the user of goods to the purchase department. Now the user of goods is going to raise a purchase requisition saying that I want, say, one laptop with this configuration, blah, blah, blah. The RFQ is issued by the buyer to the seller, where the seller in this case is a prospective vendor. Who issues a PO? That's right. The PO is issued again by the buyer to the seller. Now, who from the buyer side? The procurement team, right? So we're going to get into details about the procurement team, the sourcing team, the accounts payable team, which are all different teams in the procure to pay team, and we'll talk about it in a little bit. Who issues the delivery note? It's issued by the seller to the buyer when the delivery is complete. The goods received note, of course, is issued by the buyer to the seller when they have checked the goods and when they basically certified that the quality of goods is at par. And finally, the invoice is issued by the buyer to the seller. Is that right? Or is it issued by the seller to the buyer? Think about it. That's right, it's issued by the seller to the buyer. The invoice or the bill will always be issued by the person who's provided the goods or services, because that person is the person who needs to be paid. Alright, so who are the key parties involved in the entire P2P process? We essentially have only two, the buyer and the seller. The buyer issues the purchase order, the request for quotation, the GRN, and finally the payment for the goods and services, whereas the seller issues the delivery note and the invoice. Now, within the buyer's organization, various departments are involved, namely the sourcing department, the procurement department, and the accounts payable department.